it take to get the rates down to 5%? That's what everybody's asking. What's going to take is a lot of details. Okay, the unemployment rate needs to tick up just a little bit. I hate to say that, but that's one of the things the Federal Reserve is waiting for. We need GDP to stay steady, and then we need the PCE to kind of stay in line. Because here's what everybody's expecting, even the Fed. They're waiting for that inflation to pop. There's got to be a time where they're saying, okay, the tariffs are going to hit, and then when are they going to really hit and push up the unemployment or the inflation numbers? Well, it doesn't look like the tariffs are going to be that much of an impact on our inflation numbers. They're going to tick up gradually. And the good thing about some of this stuff is we didn't have all the tariffs hit, all at once, which would have been a pop in the PCE or in the inflation numbers, and then it would have hopefully went steady from there. But the issue that we have is a lot of these tariffs got kicked down the road with Trump. So then what happens is even China, we don't have a tariff agreement with China yet. So every couple weeks we get another tariff agreement, and that's kind of prolonging the inflation numbers. So that's one piece of the puzzle. That's another piece of the puzzle that the Federal Reserve is monitoring. And then the shift in the dynamics at the Fed. Even if you watch like CNBC and a lot of financial analysts, everybody says the data the Federal Reserve uses is lagging. So we know they're lagging. So a lot of experts are coming in right now saying, okay, we've hit bottom. The Fed at this point is going to have to cut rates because they have to save the job market. And they even came out and said that. And a lot of people aren't expecting inflation to jump up as high as they anticipated. So the ballpark here is as long as inflation kind of stays in a realm, you don't see a major uptick at once, the markets are going to stabilize. They can take a 0.1 or a 0.2 increase. What they can't do is take a 0.3 or 0.5 increase in the inflation numbers. Okay, that's that piece. And then the employment numbers, I hope they stay steady, but if they uptick a little bit, that's what the Federal Reserve is anticipating. And if you see that, you'll see the Fed continue to rate cut as well. So let's get over to the Federal Reserve and see what their expectations are for cuts.